We are back on this wonderful Thursday. A lot to get into today. We're going to talk about US oil, a lot of things that are concerning around some banks as we are getting some credit rating information coming later on, and also shortfall, which we did talk about a little bit yesterday, but just in case you didn't get the message, four, 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 fucking four here on Money Never Sleeps. Welcome back to Money Never Sleeps. Apologies for that intro. You can tell I'm feeling much better now. Took 2 shots of ginger, orange juice, turmeric, and did a line. I'm joking about the line joke. But yeah, we're back. I'm very excited to be here. How are we doing today?
Doing good, doing good. Almost the end of the week. I'm really looking forward to the weekend because I don't have anything planned, and sometimes those are the best weekends.
Absolutely. I think this weekend I'm just going to spend some time looking at some charts, maybe posting some on Twitter. I feel like there's a lot of stuff that we always have to get into, but there's just news that comes out every day that kind of blocks us from going into too much into depth with some of the price action of some things. So this weekend might be a good time for me to drop some of that on Twitter, and then maybe we can show some of that on the show next week. But today it's a really interesting day, I think, because there's a lot of things that are very conflicting in the market. If we look at TradFi across the board right now, we can see that it's barely green. Just in the Dow, it's red in the S&P, maybe about break even in the S&P now. A little bit red in the Nasdaq, but then we're also seeing the VIX and the dollar pull back a little bit here. I anticipated that we were going to see a little bit more green than I think we are seeing right now, just because everyone was going so short at that point. They got to liquidate people. I think we're seeing that in crypto for sure. I'm waiting for it to happen in TradFi coming soon. But the one thing that's been really interesting, and we didn't talk about it yesterday, has been U.S. oil. U.S. oil absolutely taking a fat dump, right? This thing is shooting down. We're currently trading U.S. oil at 82.21. Let me pull up the chart real quick. And I kind of want to just talk about some of the implications of price going down this quick. I know Jim Cramer, I almost called him Jim Jordan. Obviously, there's a lot of Jims in the news lately. But Jim Cramer, he has been talking about how Russia messed up here and demand is low. Therefore, we're going to start seeing cheaper oil prices. That's going to be also cheaper crude, and gasoline is going to go down, right? Gasoline, I think, even hit a negative 7% day. But we can see that U.S. oil here, it's down again about 2.61%. This is pretty violent, right? This is a pretty good red candle to the downside. It pretty much wiped out this entire move up from, let's say, August of 2023. Got rejected right at this level of 93.85, which was an important level that we said if we broke above it and we start closing above it, we'd be on our way to $100 a barrel. However, we got rejected from it. Now we're through the 50 moving average on the daily. If we look at the weekly here, probably going to test that 50 moving average on the weekly. So it's not necessarily the greatest price action. It's a pretty drastic move. But my question is this going to be long lasting? And if this is a price, pullback, is this necessarily a good sign of, the overall economy and the overall market? I think if anything, this is showing that if there is low demand, the price is going to come back down because they're going to try and find the right price for it. But low demand isn't also a good thing if we're anticipating that people are having the funds to pay for some of this stuff. So I think overall this is something that we have to wait and see. But I just wanted to get your thoughts on it because this is a pretty drastic move.
Yeah, no, I think it brings a lot of things into question as far as what people are willing to pay and, how people are adjusting in their day-to-day lives, right? Like, I think I heard a story the other day about someone who they were, just realizing the pain of a lot of day-to-day products and, paying for groceries, paying for bills, paying for gas, realized, hey, I'm working from home. I don't drive my car that much. My significant other does. Why do we need 2 cars? Cars, I can sell my used car for a lot more than I could in previous years. I might as well get that value out of it. And, I can invest that or just put it in cash, hold it in my savings. And I was like, that's a pretty good point if you really don't have anywhere to go. So I think, I mean, I'm not saying that's what's causing this, that particular use case. I think another potential driver is, the UAW strikes. If cars aren't being produced, cars aren't able to be bought and sold, then the demand for oil is less because there can be less petroleum being produced in gas. And I think the other kind of call out is what, like, a lot of products are produced from crude oil, like plastic. The main source of plastic is, you're converting petroleum. So I think it's also, our I guess let me slow down so I can phrase this properly. I think the thing to look at in the coming days and weeks will be what other manufacturing processes are impacted like this. Is the price of plastic being increased or decreased as a result, and other things that just drive off of this, because it could go either way.
Yeah, it's a great point, and like you said, a lot of things are manufactured using, crude oil, right? We're seeing slowdowns in manufacturing, not here in the US as much as we are seeing in other parts of the world, especially Eurozone. Eurozone, we're seeing terrible numbers out of Italy lately. We know that German manufacturing right now is actually in an extremely bad place, almost like depression era type of, recessionary like levels for manufacturing. That's not a great sign because obviously if manufacturing goes down, the next job sector to see some of that is going to be the services sector. And again, with if this continues going on, obviously this is finally going to reach the US. So I'm seeing the prices go down here. Maybe that's part of the reason why. I also think that just because, like you said, a lot of demands, I think people don't necessarily want to be paying for gas if they don't need to. If they don't need a second car, why would you? And again, there are people who are probably able to get some bids on some of those vehicles too. UAW 100% is going to be a huge impact in the automotive industry and a lot of these goods like oil. It's also getting to a weird point too where we're seeing natural gas kind of take up today too, which is really interesting to me because this kind of plays in line with US oil in some degree that, obviously as we head into the colder months, the demand for natural gas is going to be a lot higher. But at the same time, we're seeing, the demand for oil kind of tick back here. My question is, does does OPEC in some way, maybe just because of all the tension that we do have, between Russia, Saudi Arabia currently, does OPEC in some way see this and decide, okay, let's cut production on more? We don't release as much, and that kind of not fixes, but benefits them to the point where, okay, now we're seeing that barrels, US oil is starting to trade a lot higher than it once was, right? WTI Brent, it's going up because now there is a low supply and demand. They're trying to find to meet the demand for the amount of supply that they are producing.
Yeah, no, and I think one thing that just popped into my head, and I don't think anything has come of it yet, but last night, Russian foreign intelligence put out a call that they had credible intelligence that the Ukrainian Secret Service was planning on attacking the Turk Stream pipeline. So no attack has been made, but there was, I believe it was in March of this year, there was the attack on the Nord Stream pipeline that the Russians were claiming it was the West. The West was saying, no, it's the Russians. So no, I think that's another thing to keep an eye on, because, if that pipeline does get attacked and that's where oil is flowing from Russia through Turkey into the West, that's another thing that less oil supply coming from current suppliers, then we have to start making more deals with OPEC members, Saudi Arabia. And yeah, it just could ultimately have some pretty negative effects on oil.
Absolutely, and that's kinda concerning too, because I think we saw back in I think it was the week of the 14th in September, that there was military exercises between Romania, the United States, and a couple of other nations in the Black Sea, right? And I think we kinda covered that there was a potential. I'm not saying it is gonna happen, but, if it happened once, it's not out of the, possibility that it could happen again, that one of those pipelines are attacked. There's Turk Stream, and I forget what the other one is, it Blue Stream or something like that? It's there's 2 of them in the Black Sea, but I wouldn't be surprised if that's something that does, or fears about those mount, and that does kinda cause the price of UNG, some of the natural gas to continue to go up, because natural gas went above $3 today, which is really impressive considering how low it's been recently. And, the price of oil, if we do get into this place where, okay, something like that happens out there, this is definitely going to trickle down into the world economy. Global markets are not going to be happy about that because obviously they're going to be paying a little bit more. We're going to see if demand does, constrict, then obviously, or some supply constricts, and demand's going to stay relatively the same, maybe even increase because there's a lower supply, then the price is going to shoot up. So it's really interesting to see right here. Again, the price of oil right now, and again, I'm using US oil. I'm not using Brent or anything like that. If you want to take a look at Brent, I believe that it is currently around, roughly around the same place, 83. I wouldn't be surprised if this is something that is a bit of a fake out, and then the news is a bigger driver than the technicals itself.
Yeah, no,
So
I
that
mean, I think that definitely plays in. Buy the rumor, sell the news, and yeah, it's probably going to be a lot of people buying the news and selling the rumor this time.
That's a good point too. Yeah. So yeah, that was the one thing I saw in oil. I think I just had to bring it up because Jim Cramer was saying that it's over. Guy likes to take victory laps a little earlier, so careful with that, Jim. Just forewarning. That wasn't that was I don't know why I said forewarning. Just pretty much don't victory lap too early, Jim. That's all I'm trying to say. But yeah, that's oil. I do want to take a look at this tweet. Where is it? Right here. This is something that came out to my attention yesterday, and we are seeing that there is going to be some credit ratings being announced in the next few weeks. And if we look at this here, some of those banks that we are, keeping an eye on are obviously the ones in the spreadsheet. This is from John Titus, from Best Evidence, the YouTube channel. This is important because I think there are a lot of banks that are in some pretty deep water. And so the major lender banks that are under review for credit downgrades are Bank of New York Mellon, State Street, US Bancorp, Truist Financial, Northern Trust. What else do we got here? Yeah, those are the main ones that are being listed. And a lot of those that are being listed, I just want to pull it up on the spreadsheet. Let's go here. There we go. So obviously this is a spreadsheet of, all the banks that are in some type of trouble. We could see that, going down, we have Bank of, where is it? I just saw Bank of New York Mellon's right here at 30 on this list, but up closer, we have Truist here, which is in yellow at number 11. We have Northern Trust, which is here at 10. US Bank, I believe I had somewhere down here as well.
What's this? Is there any impact or expected impact on State Street?
On State Street, let me see. I
Yeah,
just saw that.
I remember like a month, maybe 2 months ago. I think
State
it
Street,
was
yep.
BNY Mellon, State Street, and Truist all got some sort of credit downgrade by Moody's.
Yeah. So all those were banks that got downgraded. State Street, here it is. And again, this is something that's really interesting from this. Again, we get some of these balance sheets coming back in a few weeks. We also have options expiry for a lot of these post October 20th. So whether that gets released before or after, it'll be interesting how price does play out. But we do know that some of these banks are under some, pretty critical levels, and a lot of them are at extremely, strong support or key levels of support, to the point where if it goes below that, well, there might have to be some price discovery, and the market's going to have to find where the actual value of these banks are. Question is, are the paper losses on some of these banks greater to the point where it's like, okay, if they have to realize any of these losses, then where does this put them? Do they have more unrealized losses than they do have assets on hand? Is the value there? It's a shortfall question we need to have. And these are banks that are, once again, in these top few, it's the top 30 banks or so, 34 banks that are in this list. And let's just go through it. I mean, Northern Trust, 68.82% of that of its equity is Federal Home Loan Bank loans, and we can see here that is roughly 7.5, less than 1 year. So Truist Bank, 49.55% of its Federal Home Loan Bank is percentage of equity. It's huge numbers. If we look up here, Signature Bank, doesn't exist anymore, is 140%. Silicon Valley, 97%. First Republic, 77%. I think anything in the 45 and above is, pretty concerning. If you're looking at this, again, it shows you that they probably didn't have enough liquidity on hand in the short term, so they had to borrow. And we do know that the Federal Home Loan Bank system, that is the second borrower of last resort, you only go to them probably before you would go to the Fed for, save us. That's pretty much what would happen if you're going to the Fed at that point. But I mean, these are also banks that have, decent amounts of bank term funding program out there as well. So they definitely have a lot of, they've been borrowed a lot of money. The question is, are they able to fill some of those holes on these sheets that they're facing post, March 2023? So I'm just looking at some of these banks. I think we should take a look at the charts real quick, just go through them and see how these hold up compared to where maybe they could end up if something bad were to happen. Let's go here and pull up Northern Trust first.
Yeah, I think one thing that would be interesting too would be to kind of overlap, and maybe this is something we can do in the background and talk about tomorrow or next week, but overlap some of these banks and look at banks that collapsed in March during that kind of regional banking crisis and see what we can see if there's any sort of trend between, what was going on with them and what's going on now.
Yeah, absolutely. That'd be a great thing for us to definitely dive into and do some, show how that's playing out now as opposed to then. But this is Northern Trust. I haven't done too much TA on it, but I do want to point this out that it looks like this is a huge level support line, obviously, right? So I think it would be here, and we're currently wicked below it. We can see that we wicked below it down here at $65.55. As we get closer to, I think that October 20th date, we do get some of the information. I think credit downgrade, if this does, come to fruition, it's probably going to send it below there, right? And if that's the case, we're below that, we're probably going to be heading to the next level of support, which could be somewhere in the range of, obviously we break below this, probably going to be somewhere between $52 and maybe 48, 49. It's a pretty good move from there. I think that's right from here down to there. It's about 23%. I'm not saying it's gonna go there overnight, but who knows? If they're insolvent and they have to find a buyer, there's a good chance that this thing could go to zero, right? That's what the reason why they're on that list. They have a lot of red flags that we need to be keeping an eye on. Truist Financial, personally, this is the one that I'm keeping an eye on the most. I think that this is one that's very similar to, it's probably the best example of what was going on in 2018, 2019 with some of the banks and how they were facing a lot of liquidity issues. And then once the Fed pulled the reverse repo, then obviously we started going into a place where, COVID saved us because there was so much liquidity pumped into the system that some of these banks probably would have failed. But this was a merger between two banks. And then once they finally merged, obviously COVID happens and now they got tons of liquidity. But I think that the issues that came from that merger are still there, still present. A lot of debt, a lot of, just bad actions buying treasury bills, probably at super low rates, bonds at super low rates. But this is one that I think JP Morgan is actually keeping an eye on. And the reason I say that is because every interview I'm seeing on Bloomberg and CNBC, any JP Morgan analyst that talks about any of these bank collapses or ones that have exposure that they probably shouldn't, that could lead to contagion, for some reason, they always happen to say Truist Financial. So I don't know if they really want to buy them or if they anticipate that there is going to be some type of fallout. But Truist Financial, honestly, is one that's, you can see that it's currently is trading at $27.22. I mean, if this thing goes to zero, obviously that's that's what, 99%. I mean, it can't necessarily go to zero 100%, but it would definitely be something that I think wouldn't be out of the realm of possibility. And again, looking at some of their numbers on that sheet, this bank has roughly 55% of all of its accounts are over 250K in their banks. So it's a bit more closer to a whale bank, very similar to Signature, First Republic, those banks, as opposed to something like Schwab, which, has less than 50%. But it definitely does raise some, concerns regarding whether or not this is another bank that could potentially be one of the first ones to fall if something bad were to happen in the banking sector.
Well, and I'd have to, oh, sorry to cut you off,
No,
but I'd have to imagine too, when you have that many high net worth customers, and that's the majority of your customers, generally those would be the people that are more financially literate. So if they're anticipating some sort of crash specifically within that bank, or they're getting worried that the bank is in hot water, those are probably the people that would be more likely to take money out of the bank than a bank that has a bunch of customers, but 60 to 70% aren't high net worth or accredited investors. They're not super financially literate, and they might not know anything that's going on until it's already hit them too hard to recover from.
Absolutely, dude. You literally stole the words right out of my mouth. And I do want to pull up something real quick because I'm going to show you exactly the issue with some of these banks right now. So, yeah, they're definitely the people who have a lot of money. They probably want to get out of these, this bank. And we've seen this is probably the most concerning thing here. This is deposits of commercial banks, all commercial banks, percentage change from a year ago. You see that we're negative, right? So obviously they are pretty much just bleeding money. These banks, they're losing deposits, and the issue is, if rates continue to stay this high, who the hell is going to pull out a loan at at these rates? Insane. It makes no sense. But at the same time, they can't issue debt, so that means there's less money that's being created into the system. So this is concerning, and I think a lot of people kind of are like, oh no, banks can't go down. And it's funny how a lot of people, I tell them like, okay, I think that there's a good chance that there's a lot of good banks that could go down, well-known banks, and it's because there's so much money leaving the system, right? There's a liquidity crunch. There's going to be a huge tightening of credit pretty soon, and if rates can remain this high, you're only going to see this exacerbate even worse, right? So I think that there's a lot of banks. I mean, I'm going to say some right now that are on that list. PNC is one that I'm still concerned about. Charles Schwab is one that's concerning. KeyBank, I think Ally is one of the smaller ones that there's a good chance has some liquidity issues, especially if people are pulling out. But I think, like you said, the ones that have the big amount of deposits over 250K. I mean, let me just look through this real quick. Right here, KeyBank's got 61% over 250K. PNC's got 55% over 200K. Truist Bank's 55% over 200K. Citizens Bank's 53. Fifth Third is 58. Like a lot of these banks have a lot of money in the and still or percentage of their accounts or have a lot of money in them. So if we're seeing this continue to steepen, watch out. I think that's the case. It's a matter of time, if anything.
So if this were all to occur, at what level or which of those banks would have to go down for the government to intervene rather than just what happened in March, where you have JPMC and a bunch of other, more stable top dog banks saying, no, we'll all come together and we'll pick apart each of these banks and split assets. Like, at what level do you think the government says, no, there's too much contagion? Is it Schwab? Is it Northern Trust? Is it they have to have multiple of those go down, or what does that hypothetically look like to you?
To me personally, I think it looks very similar to 2008. Obviously, in 2008, say Bear Stearns, JP Morgan, thank you. Uh, I'm being very sarcastic about that. Thank you. But if we look at what happened in 2008 in September, I mean, all it took was Lehman Brothers to go down. The next thing you know, you had for a year hundreds of banks go under, right? And then you had Washington Mutual, which at the time was the biggest bank to go under, obviously acquired by JP Morgan. Once they file for bankruptcy and everything like that. But I think the way it's going to go is one of these banks is going to go, and then a lot of them are going to follow suit. It's just going to be, it's impossible to save all of these banks. I think definitely one of the big boys has to go down. And if that's the case and they can't find a buyer, I don't think they're going to bail them out. I think they're just going to let them go. And, everything else is probably going to follow suit. And maybe they pick up the pieces when they decide to sell their assets for, I don't know, pennies on the dollar at that point. But I think some big player has to go. If it was my bet, I'm not going to make bets. Obviously, I'm positioning myself across the board on all these banks just because I think that there is a good chance that one of them could go. Um, I'm just going to stick with the top 10. Look at that list and look at the ones like Signature, Silicon Valley, First Republic. The ones tied in between there. It's Charles Schwab, it's PNC, it's Northern Trust, it's Truist, KeyBank as well. So those are the ones that I think are the ones to keep an eye out for. And if we do see a credit downgrade for Truist, it doesn't mean that downgrade can't affect any of the other banks as people freak out. They go on a bank run. And I think the bank run right here is a great place to segue into our next topic, which is the shortfall of Binance and maybe why Bitcoin's price just will not move up or down, and we're stuck in this absolute crypto limbo. But I think that's the place for banks right now. What could happen if this were to play out? Again, all it takes is one domino to fall, and everyone freaks out and panic sells and tries to get out of all markets, banking, including with deposits. But I do want to talk about Binance. It's been a wild 24 hours, still getting more screenshots, finding out more information. I think the most important thing for me today, which was, I guess not too surprising, but it was a good reassurance to remind me of why the price of BNB isn't going down. and that was that Binance probably owns about 76% of all BNB tokens. I saw that today. I'm like, ah, fuck. That's, I mean, is what it is. You kind of knew that. That's why the price wasn't fluctuating too much, but it's just like this thing is 100% just being propped up by these guys at this point. They won't sell, so guess what? Here we are.
No, yeah, I mean, ever since Paxos pretty much said we're not buying this, we're not accepting this, and Binance they had to start going on the defensive on the retreat. They got rid of BUSD, they switched and said USDT, and then they realized, hey, wait, TUSD, pretty much no one knows who's behind them because once Tecteryx acquired them from Archblock, no one could really figure out who is Tecteryx. And then you see in July, Tecteryx takes over full control, operational control. And that was right after Binance, people really started trying to like get past the point of this is just FUD versus, okay, what's going on with Binance, right? And that's when you start seeing the TUSD stablecoin printer going burr. It's all between Tron, a lot of shady activity with Binance. And it's really like, it just raises more questions and red flags than it does show that you're in a good position, right? I mean, like, it just doesn't add up.
Yeah, and I mean, I hate to be the guys that always are like, "Oh, Binance, TrueUSD." It's like, no, there's a reason why we're bringing this up because this just reminds me so much of like the months before FTX collapsed, and I say this because FTX got shut off from Tether, right? They could not use the Tether treasury, so they had to fucking find stable coins. And I think there was even a tweet from SBF a few days before the collapse, like October 27th or something like that, where it was like, "Yeah, we're gonna play around with some stable coins. It could mean something, it could mean nothing. We'll figure out what's going on here, but we're just going to try some new things out." There's so many stable coins that are coming out. Binance is continuing to add more stable coins, to their roster of, okay, how can we have an off ramp for fiat? And that's why I kind of do think that a lot of what we're seeing is TrueUSD, BUSD, STUSD, T, which is on, Huobi's, their whole fucking blow up. But they're just swapping for Bitcoin, selling the Tether, swapping for USDC, getting the hell out of the markets because they haven't been cut off from USDC or Circle at all. And right now, it just seems like they did have a balance. And I mean, the hole in their balance sheet back in September. And that kind of lines up with all the TUSD that was printed back in September, right? I mean, we saw $1 billion that was printed on the Tron blockchain. Next thing you know, within minutes, it was burned. So obviously they redeemed for something. It's just so sketchy how much they are just relying on TrueUSD, how much they're relying on FDUSD, not as much nearly as TrueUSD. And then you're also seeing, some of these smaller stable coins, and you're also seeing all these new shit coins that they're just listing on the exchange when before there was not like this on Binance. They list a few coins, but they would not list every single one. And that just kind of tells me that they need liquidity and they're taking advantage of, how many shit coins can we say, okay, the value of these coins is equal to what we have in our reserves. But if the market goes down, that's not true, right? And that's the big issue that we're facing with Binance. And again, the fact that they're holding 76% of the BNB coin, is BNB really worth 210? I mean, if no one's buying it, is it really worth that much? That's the question.
No, yeah, 100%. And I think like the difference between just, spewing FUD versus justified questioning and criticism is I'll gladly eat my own foot, put my foot in my mouth if they can do a proof of reserves and auditing and all the stable coins that they're affiliating with and onboarding and offloading. Those are all, entities that are doing a legitimate proof of reserves process. And there's due diligence that whenever someone of any legal jurisdiction has some sort of question, you're answering or at least reasonably attempting to comply, right? Like Coinbase is an example. Not everyone's a huge fan of Coinbase, but when they got hit with the Wells notice, whenever the SECs come after them, they've done their part and even gone over their edge. So, I think even Kraken too, when they got hit by the SEC, they just said, hey, we don't want to deal with this. We're going to bow out of US operations. So whether it's within the US or outside, I think it's just like the more that you do to bring attention to yourself, the more justified criticism and questioning is. Not to say that all criticism and questions raised are valid, but more people are going to have them, and rightfully so.
Yeah, I mean, it's a great way to put it. And the fact that you brought up Kraken, I think, is really interesting because Jesse Powell kind of chimed in on this yesterday as well, talking about the issues at Binance. And Jesse Powell is, you can love him or hate him. I honestly kind of like the guy because he's just willing to fucking throw anyone under the bus and speak his mind. Again, Kraken itself, I've used the exchange maybe one time. It's not my favorite trading platform, but here we are. This is Binance, being a repeat of FTX. This was from Crypto Hippo, which is obviously I'm using them as a source right now. But I appreciate you for putting this out here. But it shows you pretty much the layout of Binance and Zhao's owned entities, how much he owns percentage wise of it, and how everything is connected within the Binance CZ infrastructure. And you can see that it's pretty much this is what they're all trying to figure out right now, right? And this is really important here too. This was one of the confidential parts from that was leaked. And so the last communication you had about the Sigma chain shortfall was last month, I think you said. And then the person responds, yes, there was communication last month. And again, Sigma chain, if you go up the ladder, Sigma's right here, goes right back to Zao, right? And it's all interconnected with Binance Holdings Limited, CPZ, which is pretty much the owner of BAM and everything like that. It goes down to Binance US. But I love Jesse Powell's response here. And he said, all that matters is assets minus liabilities, and you have to count it asset by asset, not by equivalent value, making billions of liquid tokens at par as FTX did with FTT. Having billions doesn't mean you're not still short billions when the run to withdraw comes. And that's the most important thing that kind of made me just like a light switch off last night. I'm like, these motherfuckers. That's why the price of Bitcoin and a lot of these other assets aren't going down, right? It's being propped up again. We kind of knew that it was being propped up with these stable coins. And it's not really upsetting me that that's the case, but I'm like, why are they holding it up? Like, you can make money going back and forth either direction, right? That's at least that's the way a logical trader would think. But the question is, sentiment is really high right now because people actually do believe that we're in a bull market, right? So you
Mm-hmm.
wouldn't be inclined to sell. But if it were to tank 10K from here, people would be freaking out. There would be a run in every single exchange. And the two that I think would be faced with the most impact and probably start seeing those withdrawals are halted. I'm not going to say who they are, but they're probably the ones who are propping up the market the most because they don't want the price to get to the point where, hey, now everything that we have in our balance sheet, well, guess what? It kind of doesn't exist in the first place, and now we're insolvent by a huge fucking margin.
I don't know. I've got one word, 4 letters for you. Be four. No, but
that's how
I
we
think
started that way.
No, but I think the shortfall scenario that Jesse brought up is something that a lot of people were finding out when they started dabbling in meme coins and liquidity pools, which is just because there's that much liquidity and that big of a market cap doesn't mean that's what the coin's actually worth, because there's slippage and there's also every time there's a buy and sell with an automatic market maker, the price is dynamically adjusting. And also, if you're using Uniswap pools within V3, people can apply and set liquidity at a range. So if one whale goes and dumps, all of a sudden there's a lot less liquidity.
Yeah.
But that's kind of venturing into a whole different part. But no, I think it's important that people realize like exactly what Powell was saying is just because there's a token there, that token valuation can change very fastly. So that's one of the reasons it's important to look at market cap versus fully diluted market cap, token unlocks, and just like everything like that we preach on here quite often.
Yeah, and I mean, even take Binance out of the equation. Think about how many shit coins are owned by the devs, right? When you have that much supply owned by a single entity, they can control that price as much as they want. And now to get back to CZ, 76% of BNB is owned by owned by CZ. And again, it's now can the price push up beyond that? Obviously, there might be a way for them to do that on their exchange, but I'm not going to get into that. But this is kind of what we're playing. We're kind of in a shitcoin Ponzi scenario in some way, and just at a macro fucking level of a company that's got probably like $60 billion worth of assets on hand. But yeah, so that's just one thing I wanted to pull up. Last thing I really want to get into is Bitcoin and liquidations, because you've been on the fucking ball with these liquidations. You've been texting me saying, hey, if they liquidate them here, it's going to go right here. And the next thing you know, it's going to pull back. And then CZ's just said, pull the rug on these guys. But yeah, let's get into some of the liquidations. I'm going to pull it up on CoinGlass. If you want to talk about some of the things that you were seeing last night, that'd be great while I get this up here.
Yeah, so let me make sure I have my chart kind of set up here. Okay, so yeah, about yesterday, I started watching CoinGlass yesterday evening, and it was really interesting. There was this period, probably between like seven, no, I think it would have been between like 3 and 6, where Bitcoin was like really fighting for 27,800. And that was where the first wave of big liquidations were coming in, all the way to like 28,200. And I want to say there was like just around 100 million worth of liquidations on Binance alone, in that range, somewhere in there. And I think the total amount was close to 400 million across exchanges on Bitcoin. But no, I mean, it just kept fighting. It kept fighting. And it was just chopping in this really slow range where longs and shorts were separated by pretty much like an inch on the screen. Like the gap right now is just incomparable. And then almost, I want to say it was like in 2 candles, you can actually see the first candle on the chart. If you go to the 1 hour, it's that really, really, really thin, or not on the liquidation chart, but on the trading view chart.
Okay, gotcha.
At 3 o'clock, there's this massive up and down movement in super thin, pretty much right where it started. And then it just keeps heading up, dips back down, liquidates some longs. And then that's where it spikes this morning, cracks into 28,000 and liquidates everyone else that was going short on them. So it's, I mean, just absolutely, it was wild. It was like, you could see, just watching the stochastic RSI, the Bollinger Bands, and the liquidation charts, you could pretty much predict, like, okay, within 4 hours, all of these ranges are going to get hit to liquidate people going long and short. And then maybe a day or two later, we'll see some legitimate price movement.
Yeah, I mean, the liquidations have been really out of whack since the beginning of October, right? I mean, they've been out of whack for a period of time where you see Grayscale announces something, next thing you know, fucking trapdoor all the way down. But since October, we saw that massive shoot up on the 5-minute chart where it just didn't make sense, right? That's who the fuck is able to move a market that much. It's not retail by any means. That's the institution 100%. And they did a good job with it. And then now you get the stairs down, right? Where they're obviously DCAing out of the positions, or maybe just selling the fucking top. And now people are trying to sell and get out. But again, we're seeing this liquidation back and forth. And I was at work yesterday when you were texting me, and I was like, I wouldn't be surprised if we get to 28.2. We got close. We wicked today to 28.12 or 28.14. So there's definitely, we talked about it yesterday on the show too, there's a lot of liquidity in that range. And now that when we look at the liquidity now, it's kind of even on both sides for the time being on the BTC 7-day for across all exchanges. Are we just going to be back and forth, just making infinite money, back just whacking these out? Because again, I honestly do believe that in a market that's rational, in a market that trades, based off LA wave theory or market sentiment, that yeah, we are due for a major correction to the downside. I think we honestly should be seeing Bitcoin, let me pull up on the other chart, going probably closer to that $22,000 range, right? It's all the way down here. Let me pull it daily. My charts are a mess. It makes sense. I promise you guys, makes sense to me 100%. But yeah, here it is. This white line. I mean, this is a wild. I mean, it's a crazy 5-way move to the downside, but the higher that wave 4 went, the deeper wave 5 is going to go. And I'm looking at this and I'm like, okay, we should probably be heading in the direction on the daily chart somewhere into the low 20s, the 21, 22,000. Find some support on this. And if it holds, then we, get a nice little rally before we test it again. Maybe we break from there. But if we just keep going back and forth in sideways consolidation, first off, that just sucks because, we can't really tell if this market is moving in a rational way and we could ever find what the true value of some of these assets are, because we're having these market makers, just liquidating people back and forth. And at some point, is there a place where the market makers are just playing with themselves, pun intended, to the point where they're just, there's no one that really wants to be in this market. They're either holding on, it's off the exchanges, or if they're just like liquidating other people that have a decent amount of money. So it's really interesting, theory. But again, I still believe that this should just be all corrective and we should be making a move to the downside because we're in a bear flag here and we're also got a through wave move to the upside. This is all chaotic here. This is 100%. I don't even know what the hell is going on. I have to go into like the hourly time frame to figure out what's going on exactly in the wave counts. But looking at this one here, I mean, this is, pretty cut and clear. Three-way move should break from a parallel channel to the downside. Extremely overbought in the daily, and if we look at the monthly, once again coming into the overbought territory, coming out of it, and we got some key levels of support and resistance down here. Should be support down here that needs to be tested, but for some reason it just won't break below. And I think that's because we are in a liquidity hunting season where it's just like, all right, let's just wipe everyone out, make as much money as we possibly can in this range.
Yeah, no. Actually, I got something I gotta grab real quick and show you after being on here all week.
Please stand by, everyone. Mr. House is getting an important item for the show.
Yeah, so after spending the last 3 days on here with Kevin and having J-Web out of the picture for the week on vacation, I figured like just in case Kevin's gone, and I needed to be able to do a better job replacing Kevin. So I got Blur's messing it up, but it's getting started in technical analysis.
Oh, so, nice.
Yeah, gotta get my Elliott wave theory on.
Wonderful.
Start making those charts.
You know what the best thing about technical analysis is? You don't have to rely on anyone for it. That's the great thing because everyone draws lines differently, but there are definitely some rules in it where you just be like, all right, as long as you know the patterns, as long as you can kind of put the narrative together and you kind of see these liquidations and you use all these tools, you can kind of get a good idea of where the market's going. So I'm glad you're picking it up. I think everyone should pick up technical analysis. I learned from some smarter people than I on YouTube that were, just hours of them listening to them and seeing how the markets react, and they've been pretty right. So it's definitely, I think, something valuable that every trader should get into. Glad you're doing it.
Yeah, no, I'm excited. Getting ready to throw the little wizard glass like oracle emoji in parentheses next to my name and start becoming the best technical analyzer on crypto Twitter.
I fucking love it. I got nothing else, man. Is there anything else you want to jump into today?
Nah, I think that's good.
I think we had an awesome show today. I'm glad I'm feeling better. I feel like I definitely had more energy than I had the past few days. I'm also not, sweating my ass off. I had the worst fever last night. I worked a Chicago Fire game, and Messi was supposed to come into town because he's on Inter Miami. Dude never showed up, so that was me being out at work sick for no reason. So I'm glad I get to rest today, look at the charts, talk with you. I think we had a great conversation. Everyone, thank you for being here. Randy, always thanks for being here. I know we got a lot of other guys that are always here. We appreciate you. If you have any questions or anything, you want us to look at anything, always feel free to drop us, a comment down below. Make sure you give us a like. You know where to find us on Twitter. Everything, all that information is down below. I do want to say we are not financial advisors. Nothing we say is financial advice. We're just two guys who are trying to do our best to see how this market reacts, hopefully educate people and, give people a better idea of, maybe a contrarian view as to what other people are saying on some of the more, mainstream media and top influencer accounts on Twitter. We're just doing this because we love it. We don't do it because tell you what to do. But yeah, we appreciate everyone. We're excited to be back tomorrow for the weekly close. A lot of information that's coming out, especially around jobs. I'm really excited to see how the unemployment number looks. And this could tie into some of the information that we talked about with manufacturing service sectors that's going to play in. But that's how we're going to leave it. Thank you guys for being here. Appreciate you. And we'll see you next time. Take care.